All right, welcome to the weekly prep video for the week of October 20th to the 24th. In today's video, I'll be going over the action of the past week of the indexes, liquid leaders, industry ETFs, then end the video with long and short setups going into next week like we do with every weekend video. So if you guys enjoy it, please leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with a live stream at the open and any trades that I personally take, you can sign up for the Market Pulse Discord using the link in the comment section. Starting things off with the NASDAQ. Last week, if you were bearish, you were right. If you were bullish, you were right. We just got a full week of chop within Friday's distribution day candle. And if you go back and look at prior market cycles, after an acceleration phase where you have a big move up and then you start getting supported at shallower and shallower moving averages, like the 50-day, then the 20, the 10, the 5 intraday, and then you finally have that changing character, like a massive distribution day that we saw last Friday, you shouldn't have expected anything other than chop. And the big gap up on Monday was a great start, but really until we take out the range either to the upside or the downside, I think that's kind of the environment that we're in. Just a choppy environment. We were seeing some stocks and some like industries start to de-risk a little bit. The stocks that were very extended. We're seeing rotation into some of the safer names. And I don't know which way this will break, but my guess is we don't resolve this in just a single week. My guess is that we'll continue to chop here. So if you're a short-term trader, day trader, this is the environment to really take advantage of all the volatility. And if you're a swing trader or a position trader, this is just time to do very little and very little position sizing. S&P 500 last week was up 1.75%. Also, big gap up on Monday, then just chopped. That did also close over all the key moving averages, but it wasn't as high of a close as we saw on Wednesday, where the NASDAQ, we did close at the highest closing price last week. That was up 2.45%. IWO, the growth stocks of the Russell 2000, made a new 52-week high on Wednesday, nearly made a new all-time high, not quite there. Then Friday, we got a gap down back under the 5 and the 10-day moving averages. We undercut the 20-day at one point, but closed just above that area. Really don't want to close below Friday's low. Otherwise, this could just be a little false breakout and then a start of a correction. ARKK, similar action to IWO. This one did close slightly below the 20-day moving average, along with the 5 and the 10 days. So I use IWO and ARKK kind of as a risk on, risk off signal for growth stocks. And right now, like those were the two kind of weaker names out of the S&P 500 and the NASDAQ, at least on Friday. So we'll take this day by day, expecting a continued choppy market, especially going into earnings season. We'll get some information from that. And then switching over, looking at Bitcoin right now, we did undercut the lows of the panic on Friday, closed below the 200-day moving average, right around that 106 area. And that's where we're trading right now. I wouldn't want to short like right on a key moving average like that. My guess is we'll probably get a bounce right around this area. Now, whether that is a bounce and then we go back to highs, I kind of doubt. But I would want to see like a rally up to, say, the 10-day or the 20-day moving average, put in a higher low, and then we could start talking about a rally back to all-time highs. Getting into the liquid leaders, we got 9 to cover. Let's sort this by price percent change this current week. First off is BE, up 28.4% this week. Started with that massive Monday, up 26%. Rallied into new highs right around 125 area, and then started to show some weakness with the general market, which I think is completely fine. This still closed over the 5-day moving average. We do have our first unfilled gap down, which if you follow my channel, you know that's kind of a warning sign that I look for. But the volume isn't super heavy. The closing price on Friday, or the closing range on Friday back over the 5-day, is pretty good action overall. A couple of like a week of chop here, letting the 10-day moving average catch up, and I don't think it's the end of the world. MU up 11.5% this week. One of the better acting stocks and one of the better acting themes right now is semiconductors. We'll cover that in the industry ETFs. But just inside candle on Friday, closed basically flat over the 5-day moving average. Nice gap up on Thursday. This is a stock that I'd be watching for that 10-day moving average and support gap pullback at 192 as a potential entry. AMD, another semiconductor stock, great strength this week, up 8.5%. Just really good action on Wednesday, up 9.4%. So when the market was like choppy to the downside, it kind of consolidated over the 5 day. Then, as we had a strong day in the market, really good action, up 9.4%. And then Thursday and Friday, when there was more chop, this just came back to the 5 day moving average on declining volume on both of those days. Really strong closing range compared to some other stocks. And anything over the 5 day moving average trading like this is a stock that you should have on your radar. It's definitely one of the stronger stocks in the market. Tesla was up 6.25% this week. They report earnings on the 22nd. So I wonder if we are just getting kind of chop into that earnings call. But this is the one of the better looking charts overall. I wish it didn't have earnings this week because a little inside day on Monday and then a breakthrough on Tuesday would be buyable. So we'll keep an eye on how this responds to earnings. But for now, this had a sell the news event on October 2nd, pulled into the 20 day moving average. I love stocks that have ugly closes under the 20 day, followed by an unfilled gap up, and then tight price action. This is doing everything that you want to see out of a stock that got extended in the short term and then kind of got everyone to panic out of the name. Again, we'll see how it goes on earnings. This was up 2.5% on Friday. LEU, we did start to see some weakness out of the nuclear names on Friday. This was down 8.5% with a close back under the 10 day moving average. Still up on the week, 4.5%, but you can tell we got extended on Thursday, closed near the low of the range, followed by our first unfilled gap to the downside. Ideally, this can pull into the 20 day moving average in the gap zone right around 355 and kind of bounce there. But again, we'll take this day by day. Rocket Lab, lots of volatility up here, but you're still closing over the 10 day moving average after a big move from 47 up to 72%. So, really can't complain too much there. We're in a volatile market. You expect these kind of like upper wicks, lower wicks on names that are still being accumulated. Any names over the 5 day, any names over the 10 day in the growth stock kind of area of the market is something to pay attention to. MP had a great day on Monday, up what was this 21%, a little bit higher, up at another 3.8% on Tuesday. And then as the precious metals kind of started to deflate on Wednesday, Thursday, and Friday, this pulled back into that kind of breakout zone, into the support gap, into the 20 day moving average. Still up 3.1% on the week, uh, but obviously not like great action the last 2 or 3 days of the week. VRT, this is a new addition to the list. Up 2.95%, so almost 3% on the week, was down 2% on Friday, back into the 10 day moving average in the support gap. Still closed over that range, just under the 5 day. And this is a name that I've traded pretty poorly in the past, so I don't have a position in this. Um, but it's a name that you definitely want to buy on weakness versus strength. So that 10 day and support gap low is a spot that I'll be watching. But this does also have earnings on October 22nd before the market opens. Then last leader, NBIS. First close under the 20 day moving average since the gap up on September 9th. This was down 12.5% this week, down another 7.8% on Friday. We do have two unfilled gaps to the downside. So, kind of my line in the sand for this to continue to be in an uptrend is holding the low on Friday, at least on a closing basis. Like if we come back into the support gap and bounce, fine. But we don't want to close below this area. This does kind of have a sense of like a rounding top here where we take out the highs, but we don't meaningfully take them out. We put in an inside day, followed by our first unfilled gap down. You don't want to see gap downs right at highs. And then another gap down through the 20 day moving average, also not ideal there. Getting into the industry ETFs, because this is the weekend video, I'll go through each of them. Some of them I don't pay as much attention to, so I'll just talk quickly through them. The leader, and we'll sort this by price percent change for the week. Leader this week, semiconductors. No surprise there. We went through the leaders list, and some of the semiconductors had the best action, up 5.4%. Huge gap up on Monday, and that alone, not too surprising after this big distribution bar, but building some lower or higher lows. Didn't quite get to higher highs, but coming back in the 10 day, bouncing from there. As an industry closing over the 5-day moving average, that's a great sign, especially if it's in a group like semiconductors that kind of brings along the rest of the growth stocks in the market. I'm really glad to see this respond in such a strong manner. Makes me feel a little bit more confident about the market, even though we're in a choppy environment. Gold miners up 3.9% this week, but it kind of feels like this topped on Thursday. We had multiple unfilled gap ups with big pickup in volume for gold miners, followed by our first unfilled gap down. I did start a position in DUST, which is an inverse gold miner ETF. We've seen a lot of people posting pictures online of people lining up to buy gold at this extended price. And that's not usually a great sign when the average person is doing anything related to the market. That's usually a sign to flip to the other side. And this had the highest volume in the entire move on the way down on Friday. So I don't know if we go just like straight down. I kind of doubt that because whenever like my entire Twitter feed was filled with people wanting to short gold. And whenever that happens, like it doesn't usually go in a linear manner. It kind of we'll see a bounce back up. But this is a name that I'm looking to like add to my position in DUST on the way down. But I don't want to chase it down. I want to see a bounce back up, lower high to build. Maybe we test this gap zone and then start to roll over. XRT, the retail ETF, up 3.8% this week. Really glad to see that. But this could just be another lower high. We uppercut and failed at the 50-day moving average on Wednesday, followed through to the downside on Thursday, and then not very strong action on Friday, basically flat while the indexes were up. So hopefully this isn't just another lower high, but kind of feels like that until we can take out that area, at least close above the 50-day moving average. Biotech, or sorry, Home Builders ETF, ITB, another name that was extremely weak, like retailers, bounced big on Tuesday off the 200-day moving average into the 5 and the 10-day, but we could not manage to close over this resistance gap. 3 days kind of testing it and not quite getting through there. If we can close above that, this would be considered a higher low, and that would be constructive action overall. But anything with the 200-day just going flat, you have to expect a lot of volatility and not something that I would want to buy on strength. It would be something that I would want to buy on weakness, like after it proves that it's back in an uptrend. Solar stocks, very strong this week, up 3.6%. But like gold, had kind of a big reversal on Friday, or big reversal on Thursday, followed through on Friday with a gap down, close under the 5 and the 10-day moving averages with two relatively large volume days. This is a theme that I have felt like it's bottomed since that July 17th or June 17th when the tax credits rolled off for solar stocks and it didn't go any lower. From this point, maybe it needs some time to actually pull back and build another base, maybe the 50-day moving average, which would be catching up to the support gap here around $44. Again, I just don't like unfilled gaps on the way down. The sooner that we can fill this gap, like if we do this on Monday or Tuesday, fill this gap to the upside, then chances are we just continue higher. But kind of first warning signs that solar needs a little bit of a break. NLR, the nuclear and uranium themes, leading themes in the market, that's also starting to roll over just a bit. I don't like using that term when it's like a stock that's pulling back, but it definitely felt like Oklo, LEU, SMR, like those all had super high volume moves to the upside into new highs met by weakness in profit taking. So whether this is like a week of profit taking and then we can start to build higher, or this is more of like a start of a correction. Again, some people are going to say like a what they think. I would rather just go day by day and kind of manage my risk. And right now, I just see this as risk off price action. A gap down, losing the 5-day moving average after you make an extended move like this with volume picking up to me it is signs of just slowing down in the market. You can still trade long, you can still trade short, but I don't want to be super aggressive in either direction. KWEB, the Chinese Internet ETF, traded within Friday's gap down range. I think this is kind of a group to avoid until we get at least a higher low built out and maybe a close over the 20-day moving average. Overall, I still think this is a theme to so I think it's a theme to avoid in the next week, but overall, I think this is a theme to focus on in the last like month or two of the year, and then starting off in 2026, because we are just breaking out of a 3.5 year base. This is just a breakout like retest at this point. So as long as we don't see further volume and further price action to the way down, as long as we don't take out Friday's lows, I think this is something that can build out and then give really good like trending action as we churn through this little base. XBI biotech ETF, another theme that I think could lead in 2026. Really good price action after recovering the 200-day moving average. Now you have that in an uptrend. You've got the moving averages in the right order. A lot of the stocks that were making 52-week highs or up on volume this week were biotech related stocks. Pulling back into that 10-day moving average and gap zone is a spot that I'll be watching. Overall, up 2.7% on the week. XLY, consumer discretionary ETF, another theme that had been weakening. We had that little pop on Wednesday, uppercut and fail of the 20-day moving average in the resistance gap, and then just kind of churning on Thursday and Friday. Is this a higher or lower high and we follow through to the downside? That would be bad. Is this a higher low and we take out that resistance gap next week? That would be good. Uh, if I had to guess, I would guess that we're going to rotate down, but we don't have to guess. We could take it day by day. Robotics ETF, lots of volatility within Friday's range. That really just means that we're in some chop there, up 2.5% for the week. IYT, transportation ETF. I like that we undercut and reclaim the support gap here on Tuesday. Then we just chopped Wednesday through Friday. Again, is this a lower high? Is this a lower high? Is this a higher low? We'll see next week. ARKG, the genomics ETF, something that I'm also focused on. So like biotech, China, solar stocks, and genomics are themes that I'm going to be focused on at the end of this year, beginning of 2026 as potential leaders. If we do go through a little correction here, I think that would be perfect for the market, honestly. But this is holding up really well. We had tested the 20-day EMA, bounced there, followed through on Wednesday, made new highs on Thursday, which a lot of themes did not. And then we did pull back in the 10-day support gap, bounced there. Lots of volatility, but still showing some relative strength compared to the indexes. XLP, I thought this was starting to roll off into a stage 4 downtrend, and I still kind of think that that's what we're doing. We have the stage 2 uptrend, a really messy stage 3 top. It's good that we have had a bounce. We're back over the 5, the 10, the 20-day moving averages. But similar to retail, are we just going to test the 50-day, this gap zone, maybe even get up to the 200-day and have that be a lower high? Also, not a theme that I usually focus too much on. IYZ, this is the telecommunications ETF. Took out the highs on Wednesday and Thursday, then pulled back to the 20-day, bounced there. Lots of chop at highs here. I would like to see this like volatility lower a little bit, consolidate for a couple more weeks before we can trend. PEJ, entertainment ETF, another one of those weaker themes that had a rally back up to the 50-day. This one didn't even uppercut the 50-day. It's so weak. Followed through on Thursday, back through the 5 and the 10-day moving averages, and then closed right near the low of the day on Friday, only up 1.6%, while the indexes were up about 2.5%. XME, this is metal and mining. This has been a leading theme off the lows, and it kind of feels like this was at least a local top here. You see volume just get enormous on this move without a ton of price appreciation this week. We just went sideways after the big gap up on Monday while volume was massive. So lots of churning there from institutional investors to retail buying the theme late. And then you get hit with your first gap down and your first close under the 10-day moving average since when is this? August 21st. So obviously not good price action, not good volume action, more than likely a local top in metal and mining ETF. XLB, the basics material ETF, just hovering right on that 200-day moving average, another weaker theme, but also one that I don't trade a lot. XLE, energy ETF, continues to trade under the 200-day moving average. I had hoped that we were building in some higher lows here and then attacking this gap down zone from April. But right when we got up into that area, we were met with an unfilled gap down, which is not a combination that you want to see. And to add more salt to that wound, another gap down, which we failed to get through multiple times, another gap down, and then just no strength this week, only up 0.9%. XLV, the healthcare ETF, that did have some strength this week, up 0.8%, bounced at the 20-day EMA. This is another theme that's still in a stage one base. You still have the 50-day under the 200-day, so you have to expect a lot of volatility. It's probably not something that I am laser focused on like buying right now, but as this starts to build out a stage one base, when it does get into a stage two uptrend, it's a theme that has been completely ignored for about a year now. And that's something that can lead in 2026. FDN, this is the internet ETF, closed under the 50-day moving average. This took out the lows from Friday, so some general weakness there. IGV, software ETF, only up 0.5%. First test of the 50-day moving average since making new highs, but you're seeing some pretty wild daily bars in this action. So not really the time to get too aggressive there. I guess you could buy against the 50-day moving average, manage your risk against Friday's low. And that's probably your lowest risk entry point. But I still think that the environment is going to be pretty choppy. So unless you just buy and forget, I don't know, it'll be tough as a swing trader. XLF, this is what makes me the most bearish is seeing the price action out of financials. If we're going to continue in this bull market, like without a correction, which again, I think a correction, like a 5-week correction here would be the healthiest thing that the market could do. We got pretty exuberant price action. We went through that acceleration phase on the indexes. We had a bunch of crap companies go up 100, 200, 300%. We need some of that exuberance to be let out so we can have a really strong end of year run. And financials is kind of pointing to a correction here. We had that big distribution day on Friday. Good action earlier in the week where JP Morgan reported earnings and we had some strong price action there. But regional banks really, really brought this down. Big gap down on Thursday, took out Friday's lows, and then pretty weak bounce on Friday, closing right where we did on last Friday, only up 0.04%, still under all the key moving averages except for the 200-day. If we lose financials, it's going to be pretty tough to remain in an uptrend. ITA, this had a character change last week. This is the aerospace and defense ETF. Similar to metal and mining, this was one of the themes that led us off the lows. Now we're starting to see this character change where you close under the 5-day moving average, didn't do that except for one day. Close under the 20-day, little bounce back up, and then more distribution here. This kind of feels like we're on the left side of a new base that gets built. Cybersecurity down 0.5% this week, even with a strong close on Friday of 0.4%. Oops reversal against the 50-day moving average and Thursday's lows. Hopefully that is the low. If we take that out and financials are already weak, software is already weak, it just seems like we're losing a theme at a time. And then I would keep my eye on semiconductors to see if that's the next kind of tech theme that goes. UFO, this is a theme that I started watching this week, and similar to metal and mining, potentially like a rounded top here where we made new highs on Wednesday, but not in a meaningful way. And then we had distribution on Thursday, our first unfilled gap down on Friday. It is the first touch of the 20-day moving average and support gap, which is good. We usually find some buyers there, but we got to get over this gap down zone as quickly as possible. We don't want that to remain unfilled for multiple days. Blockchain ETF and also kind of like data center related. Also, little character change. First gap down on Friday. We did bounce at the support gap, but first close under the 20-day moving average since we broke out of the little consolidation on September 9th. And finally, cannabis ETF. Lots of frustration if you're trying to buy this on strength, and that's why we draw the resistance gaps. If a stock or a theme has a resistance gap, we know not to buy it on strength where there's evidence that they're sellers. We want to buy it on a shakeout. And hopefully Friday is kind of that shakeout. We'll see what Monday brings, but another test of the 50-day moving average. Last time we did that, we had a big gap up. We'll see if that happens again here, but this is a theme that I will be focused on. I don't have a position in it right now, but from $2 up to $6, now you kind of put in this cup and handle. It's very news driven because we're trying to figure out if marijuana is going to be reclassified or cannabis is going to be reclassified. Whether it does or not, I I don't have that insider information. I wish I did. But If it does, I think there's going to be plenty of room to the upside once we actually get going here. So it's a theme that like I'm watching, but I still have not found a way in yet. Before we get into the long and short setups, just want to reiterate that we are in earnings season and really starting earnings season this week. We've got Netflix Tuesday after the close, Tesla Wednesday after the close. Thursday, we have Intel and a bunch of other stocks as well. Those are just like the three that I'm most focused on. When you're in earnings season, you need to know when the stocks that you are owning or wanting to buy are going to report. So keep track of that. And then also taking a look at the NAAIM active investors exposure. This basically unchanged from last week from 84.57 to 84.87. It's not at an overextended number where everyone's already long 95% or above. And it's not under owned where if you're under 50% while the market's like in an uptrend, that's usually a good spot to buy. So at this point, just not giving you a signal. And we don't have COT data because the government is shut down. So this is the best that we could do for positioning. Getting into the long and short setups, we'll start with the long and go most liquid to least liquid. Talked about how semiconductors have been like one of the stronger themes in the market right now. The king of semiconductors, the NVIDIA, kind of in a do or die spot, which is usually good spots for risk reward, but also a good indicator of the overall market. So this broke out into new highs October 9th. We had that huge distribution day on Friday back to the 20-day EMA. And then while the indexes were able to chop within Friday's range, NVIDIA actually gapped down on Tuesday, came into the 50-day, gapped up, sold off again on Wednesday, undercut and reclaimed the support gap and the 50-day moving average. Inside candle on Thursday, basically an inside candle on Friday. So whether or not you trade NVIDIA at this point, it's not going to be a super fast mover because it's such a massive company. But even if you don't trade it, I think you should set alerts at the low part of the support gap and the beginning part of this resistance gap. The direction that we close, so if we close above the resistance gap, close below the support gap, I think that's going to give you the trend for the overall market. You can't really have an AI boom continue with the king of AI closing below the 50-day moving average. So if I'm going to trade it, an undercut and reclaim of the support gap would be the entry right at 178-ish. Managed risk against Wednesday's low. I wouldn't want to buy it on strength because we have evidence that there are sellers in this area. So you're really skewing the reward to risk against you if you're buying that on strength. But really hope that NVIDIA can hold that 50-day moving average. Otherwise, I would say that's evidence that we're going to go into a 3 to 5 week, whatever you want to call it, just a couple weeks of choppy correction environment. AMD from the leaders list. If there was a stock that I would buy on strength, it would be AMD. This, if you study like how market leaders of the past act after a big gap up, this is what you want to see for the stock to continue trending higher, closes above the 5-day moving average while the market's choppy, really tight price action compared to like the open and the close, lower volume on red days as we pull back into the 5-day moving average. Beautiful action here. This is like the one stock that I would be okay buying on strength with a stop at today's low. Even with that said, I would rather see a little pullback come into the 10-day moving average in this gap zone at 219. Then I can keep my risk really tight. And if the market's going to work at all, that's going to be a really good risk reward spot. NBIS from the leaders list hinted at this, just looking for an undercut of Friday's low, the support gap low, a reclaim of that support gap low at 110.22 as the entry, then stop under the gap at 107. MP also from the leaders list. When all the leaders are pulling back, like that's where the market is at a do or die spot. And all of these setups could break to the downside. And then that's evidence that we're going into a correction. They could all break to the upside. And that's evidence that we might have a little bit more steam before we need to correct. So again, whether you trade them or not, make sure you're tracking the leaders every day. This just looking for an undercut of the 20-day moving average of the support gap, 78.25-ish area. That would be a breakout retest as well. If you've ever traded MP, you know that it's a better stock to buy on weakness than on strength. I just did a video on when to buy on strength versus weakness, so check that out. MP fits the mold of a stock that you want to buy on weakness. Rocket Lab looking for a pullback into the support gap low. If it happens like Wednesday, Thursday, the 20-day moving average would have time to catch up to that area. That would be a perfect spot to manage risk against. You could take it like through this lower support or higher support gap. I'm not going to, given the market environment. I want to see everyone else get shaken out before I get back into a name. So we'll keep an eye on that spot. Biotech ETF, I don't trade individual biotechs, so XBI or LABU would be the ones that I would actually trade. And when you're doing technical analysis, you never want to do it on the leveraged ETF. I see this all the time and it drives me nuts. Always do technical analysis on the underlying ETF, so XBI instead of LABU, and then you could trade LABU. But for this, just looking for that 20-day moving average to catch up right where we found buying support on Tuesday, right at that 103 area as a spot to watch. If it comes in the 10-day and gets supported there, that's just more signs of strength, but I probably won't be buying at that spot. CRDO, another semiconductor stock, really showing some good, um, some strength as it pulls lower, which is kind of funny to say, but you got that ugly close under the 50-day moving average without more acceleration to the downside. Good action on Thursday on above average volume back into the 20-day moving average. Now we're just looking for a pullback into the HVC, the high volume close from earnings, right at 134.60 as the entry, manage our risk against the low of the pullback. CRSP, CRISPR, this is one of the themes that I am going to be focused on like the rest of this year, 2026 as well. Anything like healthcare adjacent is something that I'll keep an eye on. This is a name that just got the 200-day in an uptrend. You got the 50-day back in an uptrend. So as those are just starting to get into uptrends, you expect a little bit more volatility. You want to buy on weakness versus on strength. And we got a perfect spot here under the 20-day EMA where people will put their stops, under Friday's lows where people will put their stops. Coming into the support gap at 66.18, that would be the buy spot for me versus Tuesday's low. You could buy this on strength as well because biotech and ARKG is so strong. I wouldn't fault you for that. Like this and AMD, those are the two that like I would be more comfortable buying on strength, but I would still rather buy it on a shakeout. DVLT, this is more of a performance boosting type trade, but I love the volume pattern here. It's gone from 26 cents up to $3. And then we have pulled back, have tested a resistance gap and failed there. But look at the volume as we pull back here. Very, very light volume. Now, if we gap down, then I think this could be a lower high. And this is probably just another sign that like the risk on market and like speculative names, like that is probably over for the time being. But through today's high or through Friday's high, stop at Friday's low would be the trade on that one. INOD, massive accumulation from the beginning of September. Look at the daily volume here. This is like 15 days in a row of above average volume. That's not me and you buying unless you're a billionaire. That's like big, big accumulation. Now we pull back to the 20-day for the first time, put in a higher low, just a little undercut of Friday's low into that support gap. 75.85 is the spot I would enter, stop at Tuesday's low. AAOI, this is building out a pretty big base. This is another stock that if you study the character, you would know that it's not one that you want to buy on strength. It's one that you want to buy on weakness. And we have a support gap just under a key moving average. So I want to see everyone get shaken out before I enter the name. Just a shakeout under that support gap, 28.50 would be the entry. Stop under the secondary support gap at $27. If it happens later in the week, that 50-day moving average probably catches up there as well. And we'll be getting into a high ADR name, 10.5% nuts, in the right side of the base here with pretty low risk. SYM, this is a name that I've traded very poorly. Still kind of waiting for my entry, staying patient. You got the 20-day and the support gap right here. This is my favorite entry. First test of the 20-day and a support gap. So 63.10. Undercut of that in a reclaim would be the entry. Stop, I would just use under October 3rd's low. TMDX, this is another healthcare adjacent name. So you kind of get the two themes that I'm focused on right now. Either the market's going to continue higher and the AI theme of semiconductors is going to have a little bit more juice left, or we're going to rotate into healthcare adjacent names. And I want to be focused on like biotech, genomics, and other healthcare related names. TMDX, big cup, working on a three-wave down handle. It's not a stock that I've seen anyone post on Twitter just yet, so we know we're early to that theme. Really good action this week, finishing Friday strong, back over the 50-day moving average. What I want to see is another higher low pullback here, so probably not a setup for Monday, even though like you have a okay defined pivot at 118. I would want to see just like one more higher low pullback to shake out weaker hands, really tighten up the trade, and then break back through the 50-day as the entry. Then you can keep your stop under the 20-day EMA. And last on the long side, we have TSEM, another semiconductor stock, just pulling back into the 20-day, had a nice bounce, looking for another pullback into that 20-day moving average and support gap, right at 71.30 as the entry. Stop would be under $70. Then onto the short side, I didn't find many quality short setups right now. I think the time to hit the quantum names was last week. I think the time to hit like the extended nuclear names was last week. So I think the beginning of next week, we're probably going to see a bounce in those names. And then later in the week, I would be excited to reshort them. But kind of going into Monday, not too many short setups on my watch list. First one, QBT. I don't think it's like quite ready for Monday. We had a test of the 50-day moving average and the gap zone. We bounced right at that area. So I don't want to be shorting this on weakness because we came into a key level and bounced. I want to short it after it pop. So a rally back up into the 20-day moving average. Uppercut and fail of $20 would be the entry. Stop above Thursday's high. SNDK, this one I did short on Friday, was one of the stocks showing great relative strength. But if you do enter a correction, the things that show relative strength are just the next groups that are going to get hit. And we were starting to see all the extended names really start to pull back. So took my risk on this after it uppercut and failed at the highs and lost the daily view app. That was my entry on the trade and closed relatively weak on Friday. Through Friday's low would be an ad spot, and then you would manage your risk like at 145. I wouldn't want to give it all the way to highs unless your position size way down. Otherwise, a little gap up on Monday that loses the daily view app, then you could enter with a little bit more size and then manage your risk against Friday's high. We've got two Argentina stocks, GGAL and YPF. Uh, the US is bailing out Argentina. If you take a look at the 10 most liquid stocks from that country, they're all in stage four downtrends. So you want to short the strongest stocks and this, or you want to buy the strongest stocks and the strongest themes. You want to short the weakest stocks and the weakest themes. Unfortunately, there's like the liquidity on these names are pretty thin already. So some of the very weakest names, I wouldn't feel comfortable shorting. So GGAL, this one trades about $110 million a day. We had this big move on October 9th on volume and then just nice bull flag here. But does this break to the upside and test the 50-day moving average? If so, not something that I want to be shorting. I don't want to short this on strength because of the move and volume that we had on October 9th. That could be the mark of the bottom here. But if it's not, and we try to bail them out, and that still doesn't like keep the prices up on some of these stocks, that's when you see real panic and really some good risk reward. So a break through Friday's low, through the 10 and the 20-day moving average, that would be the entry. Stop above the 5-day moving average. Again, not something I want to like short on strength. I want to short it on weakness. I want to see like panic after a bailout. That's where you're going to see like the big wave down. Same thing with YPF, little bounce. This one on way less volume than GGAL. Came up to the 50-day moving average, weak on Thursday and Friday. Just through those lows would be the entry, stop at the highs. CAR, Avis Budget. This is a name that gapped down on earnings July 30th, last quarter. Just went sideways, lots of weakness while the market went basically straight up. Another uppercut and failure at a 50-day moving average, which is declining. We've done that multiple times now. And when you get decisive action at a 50-day moving average like that, that's a sign that institutions are liquidating positions. And that could be said for Carvana as well. That was a really good entry. Some people in Market Pulse took that entry against the 50-day moving average. Beautiful, beautiful, just touch and go. So I think that's just a sign that we had a big move up here. This was massive, 56 up to $200. Now we're starting to see some real weakness. This was on lower volume compared to October 14th's bounce. Um, but again, I think the market was just chopping sideways. This, I would want to see a little rally that fails at 153.85, so above the 20-day moving average. So that way I could keep my stop above the 50-day and still kind of stay in the trade because it is like slightly a slower moving stock. So I want to give it like a little bit of more room above a spot that I know sellers have stepped in. Covered YPF, QMCO. This is another name. Like it says Quantum Corporation. It's not a quantum stock. It just rallied because it had quantum in the name. Um, Rallied up to the 200-day moving average. I am kicking myself because 200-day gap zone extension, not an actual quantum name during quantum craziness. That was like an A plus short entry, and I missed that. Now I have to wait for a bounce back up into the gap zone at 117. That would be above the 20-day EMA. Like I said, you don't want to short these names after they've had like 3 days straight down. I've seen a bunch of people say like, "Hey, RGTI has had a gap down. It's time to like short it down here." Or IONQ, which IONQ is what I shorted last week at like $78. I don't want to short like right into this area after it's had 3 days down straight. That's where you get a major bounce and you get your face ripped off. I want to short after that bounce and then some type of weakness to show, either an uppercut and failure of the gap zone, loss of the daily VWAP, 620 setup, whatever is like the entry tactic that you use to short bounces. That is what I would be looking for. And then last, ZEPP, one of those speculative names that went from $2 up to $61. Big distribution day on Friday, down 20%. Sideways action from there. A little bit more weakness on Friday, down 4.8%. I thought through Thursday's low was probably like the proper entry here. But when this does unravel, it'll unravel in like a week. So just a little gap up, a green to red move would be shortable versus today's high. A gap down opening range break would be shortable versus the daily high. This is just something that if we're losing momentum in the market, which is pretty apparent if you look at all the themes right now, all the leading themes, this is going to deflate very quickly. So that is the weekly prep video for October 20th to the 24th. I hope you guys enjoyed it. If you did, leave a like and subscribe to the channel. And if you want my market takes throughout the trading day, along with the live stream at the open, you can sign up for the Market Pulse Discord using the link in the comment section. Have a great weekend, and I'll see you guys on Monday's video.